In this video, we'll be helping you answer the question of how to use the MACD indicator. First of all, you should know that MACD is an acronym for Moving Average, Convergence, Divergence. It is a trend-following momentum indicator that shows the relationship between two moving averages of a currency pair. What is the MACD indicator? This is what it looks like. You have the chart for the price action on top, and then you have the MACD indicator at the bottom. As you can see, you would have these three numbers here with the MACD indicator. These first two numbers represent the moving averages. The 12 represents the 12 period moving average, which is the faster moving average, and the 26 represents the slower moving average. What's important to know is that the difference between these two exponential moving averages create the MACD line, which is the blue line. And then you have another number, which is the third one, which is the 9. And this represents that 9 periods of the MACD line will be exponentially smoothed out. And this creates a signal line. So the orange line here is the signal line. And also what you'll see is a histogram. It can be green or red. And what this is the difference between the MACD line and the signal line. How to trade using MACD. We trade using the MACD indicator by looking at crossovers. The first one we'll look at is when the MACD line crosses above the signal line. We would buy there. And then when the MACD line crosses below the signal line, we would sell. This is another opportunity to buy when the MACD line crosses above the signal line. We would also buy when the MACD line crosses above the zero line. This is the zero line, the one that goes across the screen like this. We would buy when the MACD line crosses above that, and we would sell when the MACD line crosses below it. Let's look at these three examples to see how effective using the MACD indicator is. So let's say we bought here. As you can see, the MACD line crosses above the signal line, so we bought here. We would see here that the MACD line crosses above the zero line. That adds to the confirmation. There was almost a crossover here, but it didn't go through, so we'll still be holding. And then eventually you'll see that there's a crossover right here, and this is where we would exit. As you can see, from here to here, that's quite a bit of profit, a good amount. Let's look at this example. We see that there's a crossover. The MACD line crosses below the signal line, so we would enter a sell. As you can see, we could enter a sell here. Price comes down. Then we see a crossover right here. The MACD line crosses above the signal line, so we would exit that position. Again, you would have made profit. Let's look at this example. We see the crossover, so we enter. We would hold until we see another crossover, and we do right here. And again, that's quite a lot of profit. One limitation when using the MACD indicator is that it gives flawed signals when the market is range bound or consolidating. Another limitation is that you need to have a very good understanding of the MACD indicator and when to use it. And for new traders, it can be very difficult to use initially. I would advise going through the basics of moving averages and the fundamentals behind the exponential moving average. We have a video called What are moving averages that should help you. We'll leave a link in the description. You should also use an appropriate time frame when using the MACD, as it functions differently across different time frames. And you should also choose the appropriate exponential moving average parameters, as each different one has a different effect. And so to personalize the MACD to your trading style, I would advise trying out different parameters. How do we overcome the limitations of the MACD indicator? Well, we can use moving averages, more specifically two moving averages, a faster moving average and a slower moving average, and wait for crossovers. So how would this work? Well, we have the MACD indicator down below, and as you can see, the MACD line crosses the signal line. This would normally indicate a sell, but if we look at the moving averages, we can see that there's no crossover. So we would think to ourselves, this is a false signal. And were we correct? Yes, as price continued to go higher. Let's look at this example. The MACD line crosses below the signal line, signaling a sell. We'll look at the moving averages. As you can see, there is no crossover, nor is it already below the slow moving average. And so we'd think of this one as a false signal. But here you can see that there's a moving average crossover. The faster moving average has crossed below the slower moving average. We look down at the MACD indicator, and sure enough, it's below the signal line. The MACD line, the blue one, is below the signal line. So this would be a great sell opportunity. And afterwards, you can see that it continued to go down, allowing you to profit by quite a lot if you had entered it. And then we would exit when we see another crossover. Thank you for watching the video. I hope you enjoyed it. You should now be able to use the MACD indicator properly. Please do like and subscribe. Don't stop when you're tired. Stop when the work is done.